Hello, welcome to another market update. This is ES Futures Trading. It is 12:34 p.m. Tuesday, April 18th. I'm little bit late today. I'm sorry, I was doing something. I was just waiting for some kind of rally to short this market again, but I don't think that could be a good idea. This seems like a long liquidation. From yesterday, we have a short covering rally that squeezed shorts extension, incredibly upside extension in the overnight, getting the market even longer. It gave us a new high, again made in the overnight, which is a reason for the market to come back to check that one out. Um, the market took the overnight low, and volume has decreased actually. It was low in the morning, it didn't increase with break. Right? You can see it actually decrease with the break. The lower it keep going, the lower the volume. You can see how this volume is dropping here, right? And also the trend is to the upside. This could be a big break we are having today, we had today, but the market is still to the upside. For this market to end the trend to the upside, it will need to come all the way down to here, all the way to the 4150. Right now it's up here. This may be a rally that if there is something to the downside, if there is something significant to the downside, the market will keep these distributions. Value will start will keep building down here. This profile should have some downside extension. If that doesn't happen, then the trend remains intact. The trend is intact. There's some levels there here that could be used as a reference. You can see, for example, now that selling is coming from Halbach. It's starting from Halbach. It tells me that the sellers are not really, there are not big selling happening here, just a small sell. Let's remove this one. A very short-term trading going on here. Now, where the buying is coming from? Exactly from seller, right? To the tick, right? To the tick from seller, to the tick from Halbach. So the dominant force of this market is also short-term traders, very short-term traders, very short-term money here in this market. Uh, Values being built here. You have a range. You have a range. As I say, um, any significant downside will keep the distributions open. We keep the distributions open up here. The market has take this range, the 12-day range high, take the previous day range high. It couldn't take the breakout level here. This breakout, this is a weekly breakout, is again it's been bought from that level. Let me see if I can show it. I can show that in my charts here. What level is this? The 4163. This is, what the heck is that? This is the weekly 63. Is this one? No, is this one? Yeah, this one. Why I had this that one? Oh, that was there was 2 days range here, and this has an upside breakout. That's being bought from that from this level here, and this one here it has this level. The breakout level has not been taken. This one actually. Why now 63 here? This is the weekly high 92, high 63. This is weird. Oh, I haven't taken here. Now I am using this as a reference. Yeah. from this range. Um, then below below that we have another one. I think this is more it's even more important. It is a March high. This is a previous month high. March, April, we have a new high made in the overnight. That's not a good sign. Uh, Usually markets don't make highs in the overnight. What worries me now most than anything is the potential, the firecracker effect potential here is huge, man. First we have the 4140 here, which is somewhere down here. Okay, the weekly has a weak low here, and the breakout level is just right there, around the 4100. And look at the potential here. Look at these lows, man. You got one, two, three, four, five, six, seven lows, very close to each other. If this market breaks, it will be it will be huge here. I'm not saying it's going to break now. I'm not saying it's going to break today, but don't. What I'm checking. I'm watching the risk of being a long has in this market. It's extremely risky to be long here. If I'm long, you know, my trade doesn't work, I have to close it right away, very fast, because what can happen in the other direction is can it's going to be really, you know, huge. It could be. It has at least it has the potential. What I see here is it has the potential. Let Okay, let's keep doing. Oh, okay. And what I see, what I think happened here today in the morning, this was a liquidation, just liquidation of the long inventory from the overnight and some of the long inventory from yesterday. I don't see more stronger money here. I don't see a weak market that's having a sell-off. May What may happen now, since the market's on the downside, in the intraday, the market's going to the downside. Then this could be what happened yesterday. You know, things were very were trying to short the market. Now there was shorts were squeezed yesterday. Now they are going to be very reluctant to go short now, and they will be buying. They will be doing the opposite. They can't be doing the also they're going to do the opposite at high, and that can fuel a break today later on. Remember yesterday what happened? What we had? We have a big rally in the afternoon, and these markets are not the same. Markets, they also the market do the same thing that it did yesterday at very low because no two days are the same. But guess what? Traders don't care about that. Traders don't care about that. They just see prices going higher. Market rally in the afternoon yesterday. It is going to rally again today. Okay, sure. Let's do that. Let's buy the market. Let's keep buying the market. Okay, give me a second, please. I need a moment. Okay, I'm back. Um, in the morning, we were talking about the relevance of doing homework. It is very important to do homework. I had this bias to the upside, and everything that the market has was pointing to the upside. We have a spike, we have a gap, we have a breakout. The 4200 is right there, the February high is right there as well. It's very close. Everything was positive for the market. But a deeper look, right? When you do the homework, when you do the homework, we can see that yesterday the odds that we had a short covering rally were just short covering rally were, were really high. Just that. A short covering rally, what a short covering rally is. Short coverage rally are shorts that were selling the market at unfair prices that were cut short. And the only way for a short to get out, the only way the short can get out is to buy. And that can trigger this kind of movements to the upside. The overnight follow the direction of the trade. They were huge. They were good also that the direction that movement from the late afternoon was going to have upside continuation because the volume at the high, the market closed at very high, right? But that was it, right? Just that. That trade is done. You got the trade to the upside. There was a short squeeze. Then you have the opposite. You have long liquidation. Liquidation of the longs that came basically from the overnight until late afternoon yesterday, and that was it. There's no more money now at this in this market. How do you see that, right? How can I feel that? You got this selling coming here, really matching highs here. Look at where this period is coming from. G. It doesn't mean that it's not going to break. I'm not saying that, but the odds are um, who is doing this movement, who's selling here, are just short-term traders. I think the movement is done. We have one opportunity yesterday in the afternoon. I couldn't make too much over there because I entered too late. But today I was a little bit early. I guess I was. Yeah, once again, right? Once you got again. Oh, I always try to one part of the business is try to figure out what stage of the trade I am. This is value. You have early majority here, late majority, laggards, innovators here, early adapters in this area. Right? And but identify the trade is also important. If I go long here, if I take a long here somewhere here, so but what is trade? Now everything is a series of fact surrounded by different circumstances. Right? What are the facts here? What are the circumstances here? Right? What is my trade? What is the trade here? Trade was taking this high. If I'm going to go long somewhere in here because the market broke out at this level and then it gave me another opportunity to break out this when it make a weak high over here. Being long was risky, getting riskier. And the trade was this. Okay? So if this is going to be my trade, so if I'm going to buy here, I am very close to this stage. To this stage. So if the market moves against my position, I'm going to get out. It moved in the direction I choose it. I believe it was going to go. But I knew, I understand that the movement could be ending here. Now, today, you have the same thing. I have the same thing. You have these longs here, these longs going to the upside. Okay? Shorts, shorts being squeezed to the upside. Now notice where the short came from. And squeezed, and the overnight trade taking the market even higher. And all the shorts, yeah, believe it or not, there were still short. There are still shorts in the market when the market is up here. Because they are praying the market is going to come back. I can be here. No, what I do is I average my position, right? I am short here. Okay, the market is, I'm going to sell again, so my position is going to be here now. But the market keeps going higher. What? What? No, all of those shorts, all were forced to cover yesterday at the opening. Now, this trade was done. Okay, the upside trade was done. Now, what is the next? Nobody knows what's going to happen. Nobody knows. If somebody tells you, if I'm going to say the next is 4200 or the next is the breakout level, I'll be lying because nobody knows that. All I know that they, all I know is the market is very, very long. Okay, that also liquidations are increasing for those loans. I got an A scenario, the market taking the 4200, but also at the same time, if this doesn't happen, okay, if I focus too much on this, if I have only one scenario in mind, what will I do? What would I have done if the market goes in the other direction? If I don't have if I haven't thought about that, if I haven't made my homework, I wouldn't know. I would just be so biased to the upside that when the market breaks, I could be long here, and because this is a breakout level here, the market comes back, is being bought from here and go long here. Why? Because I'm watching this level, right? But what happened when the market comes back? Okay, why? What do I do? We were talking in the morning that this market has everything to go to the upside, right? Is it has a spike, it has a spike to the upside, it had a gap, it has a breakout, all right? You have one, two, three, and also it is a breakout of the inside bar. This day here, yesterday, is an inside bar, and the trade is you have an inside bar. The trade is go with the break of the bar of this day. The market opened up here, but what one of the things that can happen is, for example, this gap was very big. If the gap was going to be closed, the selling will come right away will start from the opening. It started from the opening, right? It made a little attempt, pretty much nothing, and then was just selling, selling, selling. Market was being bought from this level, though. Okay, market was being bought from this level here multiple times. Buying from this level, one, two, three, four, I guess even, I'm not sure, at least four times. I don't know if four. And then just re-enter. Re-enter this range. Not just, okay, that was the first thing that I did not want it to happen. Coming back inside this range. The next thing, if there was something to the downside, the market will close the overnight distribution. The first one, close the second one, target. Uh, my bad. This is target. Our target this distribution, the bigger one. Okay. If the market enters the bigger one, why is important? What are these re-enter the distributions are important because the distributions are treated like separate days, right? This is one range. This is one day, another day, another day. I don't pay too much attention to the overnight, but Everything is a series of facts surrounded by different circumstances. The circumstances today were different than in the other days. Today we have a market that was extremely long, barely elongated to the upside, and mostly short covering rally. The traders that were in the market, I said, many times we have talked about this, right? If you are short, you buy here, you are expecting the market to go down here, right? In this direction, you buy this level. But what happens if the market comes in this, keeps going this way? What these traders are going to do, what the shorts are going to do, to get out of their positions, what they're going to do, they're going to buy here. They buy here, not to get in this movement. What they are doing, they're getting out of the market. Right? They are not getting in to get advantage of this movement. They are getting out of the market. So the rally, this rally here, the upside movement actually doesn't have any foundation inside. There is nothing in here because most of the traders could be, I'm not saying all of it, but I am focusing on the sellers here, the shorts, the sellers. Uh, to get out of the market, they buy, and that buying, when they start getting to get squeezed, momentum joins. Traders, bigger traders see that. Momentum traders see the upside movement, and they join the movement. And this trading here that happened here, that happened here, that happened here, that happened here is very different than the trade that happened going to the downside. You can see this is a different kind of traders here, bigger traders here, that they noticed, they may have noticed the market was getting too short, and there was the volume there. There was a volume, very unusual volume also after the close that suggested upside continuation. Just odds, and that's it. No more, just odds. Okay. Now, when let's see how much can I remove this. Okay, if I can remove this. Okay, we were expecting upside continuation. What happened if what we were expecting doesn't happen? We have these observations, right? Closing, targeting the low of the range. I mean, the market is stopping at this low. It's not a good indication for the buying. That was the first sign, right? That was the first sign. Market re-entering, re-entering previous, re-enters the 12-day range was one thing. The continuation to the downside, we see the market closing the distribution. The overnight halfback was right there. Closing this distribution targets this low. Closing this distribution targets this low over here. When the market, I let my trade go somewhere in this area because what happened here, there was a spike to the downside, a very significant spike to the downside. The market moved like 5-6 points, 600 to the downside, really fast. I say, usually that's when, yeah, those kind of movements are used for bigger traders, just to leave, to close a position, to hedge, to do whatever they want to do, to take some profits, etc. Right? What happened after that? We were just having a lot of rotation in this area, a lot of rotation here. The base of the spike has been taken. The upside spike has been. I wouldn't say yet that it has been rejected, okay? Because we have a base of the spike here, the market traded below the base of the spike, but value. Okay, value is being built inside the spike. That's one thing. That's one thing that favors the upside. Still the market is going to the upside. We have another day to the upside. 1, 2, 3, 4, 5 days to the upside. We have Netflix today after the close. We have Tesla tomorrow after the close as well. I guess the biggest banks have already reported. We don't have from the economic calendar. I guess we have only the only thing we have is maybe PMI. Job this is just a weekly. This could be something, but no more. All right. Next week, I believe. Next week, I think we have Google, we got Apple, Microsoft, if I'm not mistaken. Okay, and oh, coming back to the trade. um, This trade, when this trade happens here, when the trade to the downside, what stage of the trade are are we at now? And we have seen when I entered here, I could be maybe getting the ladders, right? I was a little bit early today, maybe here or maybe even here in this area, okay? Because I was what I did in the morning is I short this market. I was very biased to the upside, but I short the market when the market re-entered this and I started to buy from here. I short the market here. When it come back down here, but then it went to the upside. Uh-oh. That's why I said, uh-oh. I just closed my position. I closed for a little loss there. And then when the market was up here, again it came back and went up. I shorted from somewhere up here now, later. All right? It give me a better position and a bigger range. And but the trade, identify the trade is one thing, getting in the trade is another thing. Those things are very hard to do. It looks easy after the fact, but it's extremely hard to do. If I I remember the times when I had this kind of plans. The market is very close. Everything points to the upside, and when the market didn't do what I thought the market was going to do, I just froze. Right? I could be long here, and I can see my position getting lower and lower and lower and lower and lower, and didn't let it go. I let it go down here, and then the market come back. You know, but that's how hard it was for me. And it requires time, observation, building new habits on top of the old habits. And in trade, we lose all the time. That's something we need to understand. We lose all the time. One important thing to minimize the losses, right, not the times you lose, not how many times you lost, because you may lose even more times. Your losses can be more than your winners. The thing is to minimize the losses, right? You find location, 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 okay? And then when the trade doesn't work, just get out. It's easier to say than to do. And we all go through those things. And when the market came down here, I was observing how the market re-entered, freeze this range, took the overnight, crossed the overnight distributions here, took this high out, and started trading below this. Um, I wasn't sure, right? I started to have doubts of this movement when the market, the way how the market started through this overnight here. Maybe I get my trade, and my position was directed to this area, even though I had my puts down here, right? But this was the destination trade for me. The ultimate destination was it. But when I saw this happening, what's happening here, have this big burst to the downside, I just decided to, I just decided to. The market was going too far, too fast, too much. Right? The tempo it was getting too short. The market really fast. That's what I saw. The market getting too short, and that's dangerous as well. When the market is getting too long, the market gets too long, was bad, and the opposite thing is happening here. Uh, Many times, many times, I close, I close here, and the market keeps going down here. Okay, but the times I don't close, the market reverses in me. So the statistics, doing some numbers there. Uh, I know that in long term, when you have a plan, if it works, just you know, stick to your plan. Stick to your plan. Now there is the possibility now that the market is that this was just long liquidation. Okay, it was just a long liquidation because the market is building value in this area. If this one doesn't have downside extension, I'm going to call it like a just short covering. I mean, long liquidation. Bigs again is boy. The bigs is again below 17, 16, 7, 7. It's very low. The risk of this market is very high. To me, it's very high, but this is not reflected by the bigs. It is not. Um, there is also the probabilities that the odds of the bond market can have a break here. Look at this low is. Have double low here, really close together, and we have a triple low here. Actually, there's three lows here at this level where the market is right now. 1, 2, 3, plus another three below. So the odds, the weakness, I mean, the risk in the long side of this market is extremely high. In this market, the thing is, what I pay attention to this is if this market breaks, it could drag, come on, it could drag the ES as well. Same thing going on in the thing. You got one, two. This is even worse here. You got one, two, three, four, exactly at the same level. Can you see one, two, three, four? Man, this is really bad. The risk, the risk to the upside, the risk of being long in this market is very high. It's very high. If I am going to be long in this market, I will be very careful, very careful. Okay, do not let the market go away from my position too fast or too far. The risk is very high. Or we're having a tight stop, very tight stop. Let's see what can. Goldman misses out on lending bonus. Clearly, Sus failed to probe Nazi past. And then I'm reading some news. Oh boy, I want to see what the financial juice has to say. Look at this low here. This high has very low odds of being remained. Has high odds of being taken. Market can take this high. No, I got this readings for the afternoon. We have time in the afternoon to do something here. All right. Um, before it is 1:10 p.m. I would like to. I was just wondering if this market was going to give us a chance, another chance to go short, but it just started to sell mechanically, kind of like really early in the session. You got this mechanical sale here, another mechanical selling coming from Halbach. This is not. That tells me who is doing the selling here. This shorts can get squeezed again today. Now, if this high is not being repaired. Now, another thing from yesterday, all of these shorts that were squeezed, you got this, the longs here, the big ones, maybe there were these ones here or these ones here, or even these ones up here and at the closing. What happened here at the closing after the market closed? That was unbelievable. These ones get out. This got get out. Could have get out here, right? Um, there's nothing here. It is hard to, for me at least, it was hard to understand to get to the point where I could say, there's nothing here. But I used to say, but how can be nothing here? I can see that high is not good. There could be something to the upside, you know, or the market is too long. There could be something to the downside. I have to be long. I have to be short. That getting past that point and finally accepting that if I look for a trade, I probably will find a trade, and more likely it's going to be a bad trade. I don't see anything here right now. The positive, the positive thing for the market is this looks like a long liquidation. We have a high that was made in the overnight. The market, this high is very close from the 4,200. Market was being sold from this level, from the 4,200. Looks like a short, like a long liquidation. Long liquidation strengthens the market. You know, it gives us a stronger market. Um, but the weakness also, no, there's tremendous amount of weakness on the lower side. And as I say, the other thing here, look at what this low was bought from. Very close from this level here. Multiple times, two times the market traded back and forth through this level, and now the market couldn't take it. The market, you know, now I want to see if this low remains at the closing. That would mean something to the that upside here. There could be some potential to the upside here. But that's just short term, right? That's very short term. I'm not planning to do anything here now. I think I'm not going to walk away from the trading desk, but because anything can happen, and we don't have actually not there's nothing there that tells us that something is going to happen. No. Okay. It is 1:15. Unless there's any questions or comments, I guess I'm going to call it a day. I'm going to call it a day and wish you guys a good rest of the day. Stay safe out there. Um, Good luck. What do Hey, Luis Fernando, no te preocupes más. Good afternoon. Una de las cosas, una de las cosas que uno hace es mira, solamente, just showing up, right? Just showing up is, you have made a good thing just by showing up. La mayoría de las personas van y vienen, pero solamente vienen cuando algo está pasando, ¿no? Y no tienen un contexto en realidad, no tienen un contexto de qué cosa está pasando. Y no, o sea, las probabilidades son bajas de ese modo. Bueno, buenas tardes. Good afternoon. Stay safe. Have a wonderful rest of the day. Bye bye, my friends.